Why, if I started the business, am I paying myself last? We are almost always the number one employee. I am acting as an employee, the marketing director, the HR director, and I've put my brain power and my financial backing into this business. Why am I getting paid last? We tend to undervalue ourselves as women. Paying ourselves first helps us add value.
Joining me today is Jill McGregor, a profit first professional and my own bookkeeper. We've worked together since 2021 to ensure my finances are as organized as my Google Workspace. And today we're going to help you do the same. I'm Amy Novick, a Google certified trainer and professional organizer. I empower business owners by helping them set up, organize, and customize their Google Workspace so they can stop fighting their digital tools and start growing their business. How can the profit first model be especially helpful for small business owners?
So I think one of the ways it is because as small business owners, like I said, we pay ourselves last, and yet we are almost always the number one employee. We almost always have employee number one because we started the business. Mm-hmm. So why, if I started the business, am I paying myself last?
Right.
Especially because I'm doing more than one role. I am acting as an employee. I'm also acting as the marketing director. I'm also acting as the HR director, and I've put my brain power and my financial backing into this business. Why am I getting paid last?
Yeah.
And quite honestly, one of the reasons that small businesses often fail is because they truly aren't paying every employee, because they aren't paying employee number one.
Got it.
The owner is the last one to take money. The owner is the last one. The owner is the one who will put money in to make sure everybody else gets paid. And that is not sustainable, nor is it really good business. No C corporation. McDonald's would never pay their CEO last. Yeah. Their employees. And even when you're structured, like I'm an LLC, single member LLC, so I don't take a traditional payroll. I still have to pay myself something.
Sure. You're working.
So yeah, I'm working. So
How does Profit First help business owners create financial stability and reduce stress around cash flow, which I do feel.
Well, I think one of the biggest things is if you are following Profit First, if you can start it at the very beginning of your business, it's amazing. But I have helped businesses that have been a few years in go back. And one of the things that we focus on is making sure we are setting aside tax money early on. As in, we set aside tax money every 2 weeks and we put it in a separate account. And what my clients tell me is nobody likes to pay the IRS. None of us do. But when you have it set aside and the quarterly tax payment comes and you just make the tax payment without even thinking about it, it adds a whole new dimension to your business because you aren't stressing about where am I going to get it? Did I pay the IRS on time? Am I paying them enough to avoid penalties and interest? And that piece alone usually can reduce the stress on a business owner significantly. The other way is you truly understand where your dollars are going under Profit First, because your day-to-day expenses are coming out of operating expenses. And if you have things outside of this plate, you have to plan for them. And so when you need a new computer or when you need to hire a new employee, we've already been thinking about that for maybe 2, 3, 6 months. And there's funding set aside in a growth or a savings account that can help make that transaction easier. So again, the business owner is focusing on the business and growing the business and not worrying about how they're going to make the next payroll.
Okay. Yeah, that sounds much less stressful. You are correct.
Yeah.
I love it. Why does Profit First resonate with women-owned businesses? And I already have my answer, but go ahead.
Well, it's kind of back to the whole pay yourself last versus paying yourself first. And we tend to undervalue ourselves as women. And I think paying ourselves first helps us add value. The other thing I have found with Profit First is when I say to a business owner, mostly female, because most of my clients are female business owners, I say, what do you want to take home as salary at the end of the year? And they will say a number, we'll just say $50,000. Profit First, it's formulated. So you just put the number in and I come back to them and say, okay, to make $50,000, after or before tax, we have that conversation. Let's just say it's after taxes. That means you are going to need to bring in this much revenue. And then they look at me and say, well, that seems really hard. Okay, now let's look at your pricing structure. Are you undervaluing the product you have in the market? Do you need to raise your prices? Do you need to look at creating passive income? Do you need to look at branching out? And what it really leads to is a great conversation, not only about the value of the business owner, reducing expenses, but also making sure that the pricing and the value of the product or service being offered is also correct. And 9 times out of 10, we're doing some combination thereof. We're reducing expenses to make sure the owner can get paid. The owner is truly reflecting on what they need. And we're looking at how do we generate more revenue that can help us pay the owner.
Yeah. Oh, I love it. I will also say the thing that I find for me and a lot of other female business owners that I've heard is that asking for money, the invoicing, we're emotional about it. And we don't mean like I'm going to cry about it. It just means it feels hard. Like you said, we undervalue ourselves. So it feels hard to ask our clients for the money that we have earned or we're about to invoice them for. Every time I need to invoice somebody, I get a little like, oh God, I'm asking for money. So it's emotional.
It is. Money is emotional, especially for women, not so much for my male clients. But profit first, I think because you go through the exercise of what am I worth? What am I valued? What is my service or product worth? We have these conversations about value and worth. And at the end of the day, no man would hesitate to charge what we should be charging.
Right. Yeah, agreed. So let's talk profit first. Can you please briefly explain the core principles of the profit first system and where did you learn about it?
I actually learned profit first from a client. We were talking about bookkeeping things and they'd asked if I'd ever heard of profit first and I had not at the moment, and they introduced me to the book. It's a fabulous book. It's a quick read. It's great on Audible for those who want more of an Audible learning experience. The core principle is that you think about your money a little differently. Traditional accounting says your revenue minus expenses is your profit that is left at the end of the year. Profit first says your revenue minus your profit is what you have left to spend on your business. So the key takeaway is that you establish what profit you want your business to have up front. You take that off the revenue, and then what's left is what you have to run your business. And there are several things included in the profit portion, but it takes it a little and reverses it a little bit from traditional accounting. And how I explain it is taking the larger plate of money and making it smaller, because we all know when we diet, if we use a smaller plate, we eat less. If you give yourself a smaller plate of operating money, you will spend less money on your business. It's just human nature and psychology. So this is just one way to do that.
So the profit that you said, profit comes first.
Yes.
It's the money that I, the business owner, take home. Yes.
It can be part of that. So that's where you get into the kind of the intricacies of profit first. So profit first also is really helpful because it assigns a percentage of every dollar coming in to one of several categories. The first one being profit, taxes, operating expenses, owner compensation and payroll. Sometimes that's one thing, sometimes that's two things, and then future growth. So those are the 5 categories where you're assigning. So for every dollar that comes in, you know exactly what percentage of that dollar goes to those individual categories.
Okay.
Because you are consciously thinking about owner compensation, you do tend to make a plan for paying yourself, which is one of the things that small business owners often do last, which is why you can include it in profit. I include it in my profit number when I'm doing my profit first. When I do my personal business, it's the revenue minus what I need to pay myself, minus my taxes, minus the quarterly bonus I want to give myself, which I call profit. And then whatever's left is what I have to pay my employees and run my business on a day-to-day.
Okay, that helps. How do you work with business owners to tailor the profit first percentages for their business model or revenue level?
So some of it, I use the methodology in the book, and in the book, it really talks about, are you a service-based industry or are you a product-based industry? Because the percentages are very different. Because if you are producing a product, there is a certain percentage that is going to go to the cost of making that product, and you don't apply profit first to that. If I'm actually manufacturing something, the cost to manufacture it, that does not really become part of profit first, because those are set costs. Because if I don't buy it, I can't make a product and I can't sell it. Versus a service-based business like you and I have, we don't have any actual expense to our product because we are our product.
Right.
So it becomes a little different. Usually I work with my clients to go reflectively. We look back at the last few years and we look at where are they spending their money? How have they spent their money? And then we have really good conversations about goals, like, is this working? Is this not working? And we tailor the percentage first profits every quarter, typically. With the first year of Profit First, you can expect to change your profit first percentages at least 3 or 4 times because you are tweaking. And we do tend to start out higher in some categories like operating expenses and lower in profit and growth because there might not be money for profit and growth. But slowly over time, by making small changes, we do that. The other thing that's really important is, again, knowing your numbers, knowing what random subscriptions you have out there you're paying for you didn't know about, making sure you are getting the best deal on a cell phone plan for your employees, making sure that your payroll is being run efficiently. And there are ways that you can tweak down operating expenses to make that percentage lower. But I also have a lot of clients who are running pretty close to bare minimum, and they're still not quite operating where they want to be. So that's when it's time to start looking at revenue.
Right. Yeah. Are there standard percentages in the book?
There are. And again, they're based on products or service-based businesses, but also on how much revenue, particularly for service-based businesses. And I don't honestly remember the numbers quite off the top of my head. If you are a business that makes under $250,000, here are what they call their target percentages. They call them TAPs. Your target asset percentage or something like that. And then if you're between $250,000 and $500,000, it shifts. And then over $1 million, it shifts again. I have found a lot of my clients, again, we fit those pretty well. And if we don't fit it, it's something to work toward.
Right. It's a goal. Maybe we covered it a little bit, but I feel like this is slightly different. So explain the bank accounts, because somehow we missed that part in the profit first.
Yeah. Part of the profit first methodology is not only does every dollar have a category that it gets broken into, but you do that through bank accounts. So everybody should have a revenue account. This is where all of your money comes in. And the idea is that every 2 weeks, on the 10th of the month and the 25th of the month, and I'll explain why it's those numbers later, that account gets drained to 0 because you take every dollar of revenue and you assign it to the operating expenses, the payroll, or the taxes, or whatever other bank accounts you have set up. So I run Profit First very faithfully. On the 10th of the month, if I have $2,000 in that bank account, it is broken out. And by the end of the day, there is $0 in that bank account, but I've put $2,000 into my operating expenses, my payroll, my taxes, etc. The reason we do it on the 10th of the month and the 25th of the month is because traditional payroll happens on the 15th and the 31st. So not only do you know your payroll account balance, you also can see and make those moves before you have to run your payroll. So it seems odd. Most people want to do it on the 15th and the 31st with payroll, but that doesn't give you time to move money or have to make adjustments. So I have found it very successful doing it on the 10th and the 25th. It's a little tricky for firms if you're running an every 2-week payroll versus a twice a month payroll, but I work with my clients and we do it just fine.
Okay. That makes sense. I like it. What is the biggest mistake small business owners make when trying to implement Profit First on their own?
That they don't have good numbers to begin with.
What do you mean by that?
They don't have good bookkeeping numbers. So profit first, you need to understand what are your operating expenses? What were your payroll expenses? What did you pay yourself last year? What did you pay in taxes? And I think a lot of small business owners have put that off for so long because they don't want to think about it. So they go to implement profit first and they're trying to do the formulas and the worksheets and they don't have the good numbers. And so they don't necessarily have a good place to start.
Mm.
And then sometimes they try to do it too fast. I love the profit first methodology, but to walk into a bank and say, I'm going to open 7 new bank accounts today, the bank will do it if you have the right bank, but do you really know what you're doing? So I do tend to start my clients on a hybrid of profit first where we open 2 or 3 bank accounts. And then after a year of good implementation, we branch out into the smaller, more detailed. Into the growth account, we break out owner pay and owner bonus, and we break some things out so that after 18 months or so, we're truly running a real profit first.
How does profit first help business owners stay organized? Or is it more accountable?
It's holding you accountable. I don't know that it really organizes you. It does make you think about your expenses. It's much easier to implement for a well-organized business.
Yeah, that makes sense. Okay. So what's the accountability piece? Because so many business owners need accountability in various areas.
For me, running profit first, it's the accountability of every 2 weeks, I take that revenue account and I put that number in a spreadsheet and it tells me where to move the rest of the money. And I do it every 2 weeks. Part of the reason I have a payroll service is because then I have to run my numbers to put money in to get payroll out. It does hold you accountable. I mean, payroll will help hold you accountable for profit first because you have to have money in there. The other thing is my clients who are implementing profit first, most of them rely on me to give them their profit first percentages to move. And there's a shared spreadsheet and I can see when they move the money. There's a column that they have to mark the date of when they moved the money. Mm-hmm. I have 3 clients right now that I move the money for them. Their accountability is they are paying me and they trust me to drain their revenue account every 2 weeks. That's part of our service agreement is that I transfer the money for them because otherwise it probably isn't going to get done.
We appreciate that.
Yeah. The other accountability piece with my clients is we are reviewing these percentages to make sure that they really are accurate and make sure that they are meeting the needs of the business.
That's great. If a business owner is hesitant to start profit first, what's the one small step they can do to move in that direction?
Set up a tax savings account and move 15% of every dollar that comes in at a bare minimum should go to a tax account.
Okay. So that's that first piece of, okay, I've set aside my tax money. I don't have to panic.
Yep. The second piece is to set up a profit account for the business owner and just put in 1%. Just put in 1%, because at the end of the quarter, you might have a few $100s. You might have a few $1,000s, and you get to bonus that to yourself. You're not going to miss 1%. Are you going to miss 1 penny of every dollar that comes in? Probably not. You miss 10 or 15%. But if you're really worried about starting, I've had clients that start at 0.5%. Usually we start at 1%.
Okay.
And when I say, can you miss $10 out of every 1,000? Yeah.
Right.
Okay, then let's start. It's $10 out of every 1,000, $1 out of every 100.
Yeah, I like that. Okay.
The other piece of that is back to the taxes is 15% might even be too much for some business owners, but I use 15% because it is the Social Security rate. If you are a traditional employee, you have 7.65% taken out of your paycheck as your Medicare and Social Security, and your employer is paying 7.65%. So as an employer, I'm going to pay taxes on me and myself and my business. 15% is my minimum. And if you don't need it, then great, you get a bonus. But if you need it, it's really nice to know you have tax money sitting there.
Yeah, definitely. I love that. So, what resources do you recommend for those looking to learn more about Profit First?
The book is great. There also is a website where you can go get some free education and talk to a Profit First bookkeeper. There are certified Profit First bookkeepers that are on their website. but there are a lot of us that use it that aren't truly certified because we want to be able to service all sorts of clients, not just profit first clients. So I consciously choose at this moment not to be certified because I also want to be able to work with my clients in the best way possible. And sometimes profit first needs to be tweaked, and it needs to be tailored more than what the book would tell you to do.
What is the best way to connect with you?
The best way to connect with me is to do a consult request through my website, which is jsmclientservices.com.
Well, thank you so much. I really enjoyed the conversation today. Thanks.
I love working with you too.
Yay. Jill's explanation of Profit First empowers women business owners to get their finances in order and ensure they are paying themselves what they're worth. If you're ready to be similarly empowered within your Google Workspace, schedule a clarity call with me today. Working together, we will complete an audit, identify your top goals, and organize your Google Workspace specifically for you. Click the link below to ensure that you feel confident in your own digital space. I look forward to helping you succeed.